broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Thursday morning, and I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, good morning, Prashant. Good morning, Nigel. Well, the big question I'm asking is the market correction over? Because we've had some positive cues over the last couple of days. US markets are doing well. So let's see. For today, looks like it's not going to be such a bad session after the good move we saw yesterday.
Well, then the US markets are more well-behaved. So in that context, we'll start off on a firmer note, which isn't such bad news.
Well, let's see if we can sort of take out these ranges, right, which has been 200, 300-point range that the market has been in. Hopefully, we should be able to. Yesterday was certainly impressive. And it was impressive because the market bounced and closed 100 points higher day on day. But from the day's lowest point, the intraday low, it was a full 300-point bounce, right? So 200 to come back to flat terrain and then 100 on top of it when the market picked up pace in the last 60 minutes of trade. So impressive. Now, overnight, you had the S&P 500, which has basically gone back to 5,000 levels. So it was up a little less than the NASDAQ. The NASDAQ itself was up about 1.6%. And that is as the US 10-year cooled, 5 basis points or so cool off in the US 10-year. But the fact is, it did not immediately build on the big 14, 15 basis point gain that we saw the day before. It may still happen, but the fact is that last night we saw a bit of a cool off. Now, the other bit, and we were talking about this yesterday during closing the last couple of hours of trade, that there were some Fed speakers which are important because they would have been the first of the lot to react to the CPI numbers, which caused all that mayhem in the US the day before. So Fed speak did not add hawkish fuel to the post-CPI market, right? They'd come and said, well, boy, this is too hot and we need to reconsider they perhaps further push back these rate cuts, which have already been pushed back quite a bit. It would have been a different story, but that was not the case. You basically had the, a speaker, he's a voter, by the way. He's typically dovish, so you got to take that along. He said that, and this is a quote, not getting amped up on 1 month of CPI data. And he also kind of indicated that, PCE is a more significant indicator as compared to the CPI, which the Fed really looks at. Okay, now the dollar index also cooled off as yields came off. Dollar index was down about 0.25%, just under 105, 104.69, 104.7 is where we left off. Oil prices also came off 1.5%, and we are at about $81.5 to a barrel. There was one other piece of news which, I just want to make a mention of it because maybe it comes up again or it dies down. But in any case, CNN, the news channel, reported that the US House Intel chairman has announced, and I quote from the report, serious national security threats. And others picked up on it and said, well, the serious threat is Russia. It never really went anywhere, and market, maybe it kind of limited gains for the market overall, but it didn't really hurt at the margin, but something to look at as well. Now, just to come back and circle back the levels, for the Nifty, which has, as I said, has an impressive rally, let me just put out the downside levels first, right? 21,489, 21,500 roughly, which is about 350 points away from where we are, will be the important. That's a 40-day exponential moving average. Now, that's got to hold. We should not revisit that once again or even come back into the vicinity of that if the market's got to build higher. On the way up, the resistance is, it's very close by, but 21,489 is the 21,891, beg your pardon, is the 76.4% retracement of the fall that we saw. So roughly 21,900. It's 60 points out, right? And then, of course, the all-time highs, etc., come into view, and that's been the case for a while. The Nifty, the Bank Nifty also continued its pullback and closed around the 40-day exponential moving average. It went past the 20-day, and it's now very close to 46,075, which is the 40-day exponential moving average. That's a very immediate term resistance. And then on beyond that, again, very near-term levels, the Nifty Bank has its daily upper Bollinger Band at 46,160. So these are very near-term levels, both on the upside and downside, but the market has been ranged despite these one-day big moves that we had yesterday. Support for the Nifty Bank comes in around 44,850. That's roughly the low that we saw yesterday and day before yesterday. Roughly the same kind of picture. Again, the idea would be to try and buy the dip, as we said yesterday, puts you in a much better framework in terms of risk-reward. GIFT Nifty is indicating a 70-point higher start, but as we've seen last couple of days, the GIFT Nifty indicates big gains. The open is smaller, and that perhaps gives you a bit of an opportunity. Sonia.
Oh, absolutely. And, as we began the show, right, we were the question that we're asking this morning is the correction in the market over now? And are we sort of going to break out of that trading range? So it looks like it's not only going to be a good start, but the market traction is something that could continue on the upside. I'll tell you why. There was a sharp recovery in the US markets overnight. The S&P 500 is now back at that 5,000 milestone. The 10-year yield has cooled off as well. The US 10-year yield, it's back at close to about 4.28%. There was large buying from domestic institutions yesterday, by the way. DI has bought almost 2,900 crores in the cash markets. And, a couple of these large caps are now assuming leadership in the market. One of them is Reliance. If you look at the chart of Reliance, right, it has now become a leader in this up move. There was 1,500 crores of delivery buying yesterday in Reliance, and it has now recovered almost 30% from the lows that we saw in the month of October. SBI is the other one. It continues to see momentum. There was large delivery buying of 800 crores in SBI in one trading session yesterday. In fact, this morning, Motilal Oswal has put out a note where they have a buy on SBI. They have a target price of 860, which is well above the current market price. And they talk about how earnings are expected to pick up in FY25 for SBI. We'll try and get some of those graphics for you on the screen as well. But PSUs are seeing selective buying now too. So, whether it's something like a NALCO, an NMDC, a SAIL, all of these stocks have started to see a lot of traction. So, that's another pocket that may come back into action. Let's see. For now, these are a couple of spaces that the market likes, and overall as well, I think the market momentum could start to pick up on the upside, and maybe this range that we're sitting on between 21,500, 22,000 on the upside is something that could perhaps get taken out in the near term.
Well, what's clear for me is that the Nifty Bank, it doesn't want to go ahead and break the 200 DMA. We have seen that numerous times. And the Nifty is not breaking that 21,500 odd mark. And yesterday, the chart will tell you the picture. In the last few times we have gone, the Nifty Bank has gone to around that 200 DMA odd. We see a bit of a bounce. Just take a look at that. It's taken support in the past as well. Earlier this year as well, we did almost go there. And from there, it bounced. Now, yesterday, it took out the 200 DMA, it took support out there, and it even crossed the 20 DMA. So now the Nifty Bank seems to have some momentum. I was looking at the institutional flows. Well, the institutions were net sellers. But it appears yesterday there was a bit of a short covering bounce that played out. Keep in mind, yesterday there was weekly expiry as well that played out on the Nifty Bank. So that could be another factor that helped the Nifty Bank in yesterday's session. The FIs, what did they do? Well, there was no big short covering out there. In fact, they are mildly more longs in comparison to short positions, and they continue to remain net short with close to around 64% of their positioning on the short side. The options data suggests that we're still in that range, 21,500 on the downside, 22,000 on the upside, and that's the key, all the active options that we saw in trade yesterday. What can help us break out of this? Today, IT could do fairly well, because you had the US 10-year yields that cooled off yesterday, but the Nifty Bank, that saw a big bounce, a 1,000-point bounce from yesterday's low, and it's crossed the 20 DMA. So that will be the near-term support, the 20 DMA, which is around 400 points away from where it closed. Can it move towards the 50 DMA? Well, that's close to around 800 points away from current level. And Reliance Industries, year to date, that's been a big outperformer. And the intraday chart of both these two tells you the picture, because the Nifty recovers when 40% of the index does pretty well. So that's about the index that we're looking at. The GIFT Nifty is suggesting some bit of green, so we'll have to build on to this start. But we keep talking about the Nifty and the Nifty Bank. The real story, I think, is in the broader markets. And yesterday, your portfolios will be feeling very, very good. Because from the start of trade, you had way more declines in comparison to advances. And by the end of the day, that picture totally turned around. So let's focus on a couple of stocks. The stock of the day for me will be Hoodco. That could be the stock that you could be focusing on. Yesterday, it corrected all the way to around the 20 DMA. And once it corrected the 20 DMA, it bounced off that mark. So Hoodco, from around 225 rupees, it went to 175 rupees, and it took support and bounced in yesterday's trading session. So that's one reason. Technically, it did see a bounce from that crucial level. Delivery-based buying is what we saw as well on that stock. Yesterday, close to around a crore shares of delivery-based buying on the NSE. And finally, we had the management joining us a few days ago. They are talking about doubling their AUM in the next couple of years by FY26. And they say by 2030, they're looking at a larger number out there. So keep an eye out on this one. PSU themes have been working. So maybe this stock should be kept on your radar.
All right, thanks a lot for that. So plenty of stocks to track this morning. But on the equities, we have Alexander Redman of CLSA, who says that the January CPI print was the 8th consecutive sub-target US inflation release. excluding the shelter at 1.5%. He adds that the headline and core disappointed US wage inflation remains above the Fed's comfort zone, and thus the market is despairing of its own impatience. Alexander, however, says that the US disinflation narrative remains intact, and they maintain the view that emerging markets can ease out, outgrow, and ultimately outperform developed markets in 2024.
I like that phrase, market is despairing of its own eagerness or whatever, right? I mean, it wants the Fed to cut and it can't wait to cut. And then when it doesn't cut, I mean, it gets disappointed. But well, there's some money market views coming in through as well. On the rupee, this is Parul Mittal Sinha of Standard Chartered Bank, who says that the USD INR rate continues to remain range-bound despite a strong dollar. She expects it to inch lower in the medium term on strong fundamentals and positive Q1 seasonality, and sees the dollar rupee trading in a range between 82.8 to 83.3 in the coming week.
All right, and on the bonds, Parul says Indian rates have moved higher in line with global rates due to higher than expected US CPI. She adds that the MPC last week turned out to be hawkish relative to the market expectation, which also aided the move higher. However, strong FPI inflows coupled with lower SDL supply continue to support Indian government yields. Parul expects the 10-year benchmark to trade in the range of 7.05 to 7.15% in the near term.
Well, we've got a lot of stock-specific action to track for you. It's the last day of earnings as well. So let's run you through the list. We look at NMDC, Muthoot Finance, Sun TV, and Gateway Distriparks. All of them will be reacting to positive news flow. On the flip side, Aditya Birla Fashion is a stock that we are looking at. You have Glenmark, Narayana Hrudayalaya, you have Crompton, as well as PTC India. All of them will be reacting to negative news flow.
All right, Dean Kim is head of global research product at William O'Neill and Company is with us here on the program. Dean, good to have you with us here. Thank you very much for your time. You just heard Alex Redmond of CLSA saying the market is despairing of its own sort of eagerness, and then kind of it gets disappointed along the way. But his view is the process of disinflation is underway. It'll take maybe a little longer, but it's very surely underway. Just wanted your thoughts in the context of the CPI beat. I mean, there are others who argue that the CPI is not a one-off. It follows a long list of, very strong beats on other data fronts. So it's not a one-off. It's a debate which is ongoing. Where do you stand on it?
Yeah, I mean, it certainly was a disappointing print, and we saw this VIX spike yesterday. But it's good to see the VIX kind of settle down today, which led to a positive day. But I do agree that overall we are making progress in terms of inflation. I think the key number is going to be the PCE number that's going to come towards the end of the month. And the Fed has previously relied on PCE, but has recently sort of gone to other data points. But I think PCE is going to be pretty critical. We are going to see jobless claims numbers tomorrow, and then PPI coming in on Friday. So we'll see what happens, but that may add a little bit of volatility to the market. But if you look at the overall trajectory of where inflation is headed, we are on a downward slope. Don't forget, beginning of last year, we were at around 8%. We're something like 3.5% now. So we've made significant progress. And I think the rate cut scenario is still on the table. That picture continues to be pushed out. But we still do believe that Fed is going to be cutting rates sometime in the second half.
All right, Fed is going to be cutting rates sometime in the second half of the year. Got that. Dean, hi, morning. I'm more interested in what's happening in India, right? Because we've been in this range with 22,000 as a bit of a ceiling for the market. Do you think in the next couple of weeks or months, the market could take that level out? And what is the near-term outlook on the Nifty?
Yeah, it's if I look at the sensex, it's a very interesting looking chart. The sensex has done a great job hovering around the 50-day moving average, or between 21 and 50-day. But I do notice a sort of a compression volatility type pattern forming, so meaning higher lows and lower highs. At some point, the market's going to have to make a decision. Do we punch through that and make new highs, or do we fail here and go below? When I look at earnings growth of Indian companies, very strong. For this year, I think the market is expecting north of 15% earnings growth. So a lot of good fundamentals all around India. One thing I do notice is the bond yield for India. It has flattened over the past month, which is quite interesting. So the 2 to 10 year yield gap is only sitting at something like 1 or 2 basis points. It was something like 14, 15 basis points a month ago. So that's kind of interesting. I think we have to keep an eye on that and make sure that we don't invert. But that's something that I've noticed recently.
All right. Hi, Dean. Good to see you in. What about individual stocks? The last time we chatted about HDFC Bank, Chola Finance was another stock that you were looking at. I think you all were quite positive out there. Anything new on the list? And what's the view on HDFC Bank? It's just been moving down.
Yeah, first of all, I am seeing a lot of sort of decent setups in sort of basic material, cap equipment space. Companies like Tata Steel, BASF, and Bhuja, Steel Authority of India, Motherson Sumi, companies like that. Early stage breakouts looks pretty favorable. And then you have on the financial side, the state bank or public banks, they have been performing very well. Some of them are extended. We do see some opportunity in Indian Bank, New India Assurance, Central Depository Services. Now, in terms of the private banks, in the case of HDFC, I think it's a sort of concern, perhaps from foreign investors when they're looking at India. As I've mentioned, the yield curve is flattening, so that may be a signal for them to trim positions in India for now. But that flattening of the yield curve can also be reflective of upcoming elections. And so once that sort of uncertainty is out of the way, perhaps the yield curve starts to steepen. And that may start to attract foreign investors. So I would be patient with HDFC and other private sector banks. We just need to wait for the stock to sort of reclaim the 200-day moving average. But that may take a little bit of time.
All right. Thanks a lot, Dean, for joining in and giving us your view on the markets. Well, let's slip into a quick break. On the other side of the break, we have plenty of stocks to talk about, so don't go anywhere.
सड़क सुरक्षा के प्रति
Welcome back. Well, this morning the global cues are good, but in Asia, actually, it'll be interesting to take a quick look at what's happening in Asia, because news comes in that Japan has now slipped into a recession and has slipped into becoming the 4th largest economy in the world. It's lost its spot as the world's 3rd largest economy. So things are not looking good in the Japanese market as we speak. Even Hong Kong is under a bit of pressure, down about 0.2%. And we do know the problems that are happening in China. So let's see how things shape up from here. But our entire research team is joining in to give us a list of top 10 stocks as we begin a brand new day of trade. So let's say good morning to them. Hi guys, good morning. Nigel, what are you looking at?
First, breathing a sigh of relief that the result season is over, right?
Yeah.
So NMDC is the last one and the numbers look good. Yeah, beat on the top line, beat on the operating profit, and the net profit was a little bit low, but that was because of an exceptional item. Now for NNBC, we already know part of the top line because the volumes are already known to us. That came in at around 11.4 million tons, but the provisional number was already out and we knew the growth was closer to 19%. So the beat on the top line is because of higher realizations. So that's one factor that played out. The realizations coming higher by closer to 22%. So some of that price increase that took place in the last quarter was already reflected. The second point is the costs were relatively lower. So when you have a top line growth of close to 45% and the expenses don't go up by that much, that helps operating leverage as well play out. The net profit, as I said, it looks like a bit of a miss, but that's because of an exceptional item. Sweetener comes in terms of dividend. They've declared a dividend this time around of around 5.75 rupees. And keep in mind, quarter 4 will be even better because they've increased prices by around 600 to around 650 rupees in January itself. and that will reflect in quarter 4. So expect the stock to open up well in the green. But Abhishek, coming across to you. What about Muthoot Finance? How are the numbers?
Well, the expectation was of a weak quarter, but they have done better than that. So, in terms of AUM growth, it's grown at 23.3% YOY and about 3.2% sequentially. Estimate was about 22% growth YOY and about 2% sequentially. The gold AUM growth is about 21.8% YOY and 2.5% sequentially. This is led by the gold pricing. As you can see, that gold price rupees per gram is at 5,793, which is up about 15.3% YOY and about 9.5% sequentially. They have been able to hold on to the net interest margin on a sequential basis, which has come in at 10.88%. In terms of home finance subsidiary, the AUM growth is robust at 26.5% YOY and 10.5% sequentially. Asset quality over there has improved as gross NPA ratio is down to 3.5% versus 4.3% in the previous quarter. In terms of Belstar MFI, the AUM growth is robust at 65.5% YOY and 12.2% sequentially, but we are seeing pain in the rural economy and MFI asset quality is impacted. Gross NPA ratio of Belstar MFI is up to 1.88% versus 1.48% in the previous quarter. In terms of their PNL, overall Muthoot Finance PNL has beaten our poll both in terms of net interest income as well as the PAT. Back to you.
All right, Abhishek, thank you very much for that. Some of the companies, of course, we will be speaking with a little later on the program. AB Fashion is the next one we are focused on. Mangalam has got the numbers. Mangalam, morning.
Good morning. So, the numbers year on year were led, of course, by the festive season and general acquisitions of the company that they've made with regards to brands, etc. So there was a 16% jump in the revenue. There was a 27% jump in the EBITDA. So margin expansion, however, was a positive. But the company reported a net loss, and that's largely because of increased leverage. So the finance costs of the company have increased from 132 crores to 245 crores. While there was margin expansion in both their lifestyle and Pantaloons brand, and ethnic business grew well for them, 43%. What wasn't very good in terms of growth was the athleisure and innerwear segment, which were growth drivers of the company earlier itself. The big trigger for them, however, will be the clarity on what happens to the 1,400 crore worth warrant issue that was made to GIC about 18 months ago, convertible at 289 rupees per share. This is the time when, there would be some clarity on conversion, whether those funds come into the company or not. So until that happens, the stock would perhaps remain in a range.
All right, thanks a lot for that. Well, Ekta has a couple of pharma stocks on a radar. Glenmark Pharma actually reported a big loss this time around. Ekta, tell us more.
Well, yes, both the stocks with G and last year of earnings season, so I totally feel Nigel's sentiment, finally done with it. But nonetheless, for Gland, I expect the stock to probably be in the red, but the commentary was positive, so maybe the stock could see some amount of recovery. So the revenue was up around 65% on a year-on-year basis, better than estimates. The margins, however, were disappointing at 23% versus 30.9%. And the profit was better than estimates as well. But Cenexi, one of their recent acquisitions, reported a negative EBITDA of 17 odd crores versus an estimated profit of 50 crores according to analysts. Now, the commentary was positive. Like I mentioned, the US sales was up $11.3 million Q on Q. It surpassed $90 million, which was the rate in Q3 of FY22. Legacy business margins was at 34%, so it's recovered back to those levels. Elara raised the target price to 2057. Nomura has a neutral target price of 1570. Now, Glenmark, disappointing numbers. Revenue down 28%, EBITDA loss 208 odd crores, net loss 351 crores, which is widened on a Q1Q basis. The numbers did decline due to a one-time impact on the India business as the company changed their distribution model. So India declined over 75% on a year-on-year as well as Q1Q basis. But North America was down 9% year-on-year as well because of US-based business pricing pressure. Adjusted growth, they've indicated, was around 9% and adjusted EBITDA loss was around 144.4 crores. But I don't think that's going to assuage concerns at this point in time. The call is at 8:30 a.m. Maybe the commentary would.
Okay, all right. Thanks a lot for that, Ekta. Let's go across to Mangalam. He's here to tell us, I think, about a couple of more stocks that he's tracking. Mangalam, you're looking quite happy after yesterday's Valentine's Day. So good on you, mate. But tell us about these stocks.
Yeah, my Valentine's Day was great. I went to the gym and held a couple of dumbbells. That's all that people do these days. But tell you about a couple of numbers. Sun TV, decent numbers coming in. Optically, it looks like just a 4% revenue growth, 7% net profit growth. But remember, this is a time when a lot of the advertising spends were shifted towards the Cricket World Cup itself. So in that, if they've managed to get in 4% revenue at a time when Zee reported a 3% decline in ad revenues, this should be a positive. And also, more importantly, as we move towards the fourth quarter and the first quarter, the chatter around IPL increases, and that typically does well for Sun TV. Gateway Distriparks, good numbers coming in out here. 15% growth in their revenues. The margins compressed a little bit, but at 25%, there is no complaint. The net profit, of course, was aided, a 16% jump is what we saw out there as well. And that was because of lower finance costs. Importantly, the rail business of the company grew 20.6%. with a volume growth of close to 15.7%. CFS business not doing too well for them, but that's exactly how the industry has panned out over the last few quarters as well. They've reduced their debt too, so see some green on Gateway Distriparks.
All right, well, thanks a lot for that. So those are a couple of stocks. Let's go back to Ekta to find out how Narayana Hrudhaya did this time around. Ekta, over to you.
Well, overall, a little disappointing, you'd have to say, if you look at it, especially on a Q-on-Q basis. So the revenue was up around 7% year-on-year. Remember, they've been clocking double-digit growth otherwise. And hence, the 7% growth was a disappointment as compared to the growth rate previously. Margins at 23.2% versus 22.6%. So marginal expansion. But on a Q-on-Q basis, there was a bit of a flattish trend. Profit also higher. It was aided by the other income, which was higher this quarter. So overall, you'd have to say maybe a little subdued because Q-on-Q, the revenue was lower, the margins were flat and the profit was lower as well. India margins were steady at 19% and the Cayman Islands operating revenue was 30.6 million versus 28.2 million. More of a working quarter, you would have to say, for Narayana, but the revenue growth trajectory as compared to the previous quarters has come off.
All right. Ekta, thanks very much for that. Crumpton Consumer is the next one we are focused on. Upasana has got details here. Upasana.
Well, the company has reported a weak Q3 below the street estimates. Revenue saw an uptick of 12% on a Y-on-Y basis, while the PAT was down by almost 3% on a Y-on-Y basis. EBITDA margins of the company is where the stress lies, which was below the street estimate. It stood at 8.9% versus 10% on a Y-on-Y basis. Now, coming to the key segments of the company, the electric consumer durable, the revenue saw an uptick of 19%, but margins were under pressure at 13.6% versus 15.9%. taking the overall margins down. Lighting products, the revenue was flat, but margins sharply expanded from 10% to 11.2%, which was not the case in the earlier quarters. Now, coming to Butterfly products, the revenue was down about 6%, and this segment has logged a PBT loss of almost 1.9 crores. While the growth remained very strong in the key categories, but the main catch here is there is a 75% decline in the corporate sales, leading to overall 34 crore impact.
Okay, all right. Thanks for that, Upasana. Vivek's back with us. Vivek, tell us, PTC India.
Well, PTC India delivered its results. A lot of concerns were there regarding, the subsidiary, but that is now back on track. However, when you're talking about the core operating performance, Q3 was slightly subdued. A lot of one-off factors, seasonal impacts. So volumes in Q3 have actually declined. But let's have a look at the numbers. Revenues higher by a little over 10% on a year-on-year basis. Higher operating expenses, lower other income, and also the impact coming in from one-time booking of a loss has also gone ahead and impacted the EBITDA. So EBITDA is down over 10% on a year-on-year basis, margins lower by 190 basis points, and thereby profitability down over 13%. So 9 months FY24 is what the company has given the volume as well as the core margins. Trading volumes higher by 5% for the 9 months FY24. Core margin, much stronger, 3.52 paise per unit versus 3.28 paise per unit. Now, what actually impacted volumes in Q3? Company sales, lower cross-border volumes from Bhutan. Along with that, a long-standing issue with a one-time supplier. On the back of that, company went ahead and booked a one-time provision. And also, surcharge income went lower. This was mainly on back of cyclical factors.
All right, thanks a lot for that. Here's a quick recap of our top stocks. Stocks with positive news flow: NBCC, Muthoot Finance, Sun TV and Gateway Distriparks. While stocks with negative news flow: Aditya Birla Fashion, Gland Pharma, Glenmark Pharma, Narayana Hrudhaya, Crumpton and PTC India. But let's also get a quick handle on what's happening in the world of commodities. Manisha Gupta joins in for a roundup of all the action there. Manisha, hi, good morning.
Morning, Antonia. Thank you for that. Well, I'll start with the crude oil prices, where we have seen the prices decline because of a very large increase in U.S. inventories by almost 12 million barrels. Also, there is record high U.S. production at 13.3 million barrels per day. So even as there are tensions in Middle East escalating, as Israel now has struck on Lebanon as well, markets do believe that no crude has been impacted yet, as in sense of trade or production, and that is not adding any premium to prices. Actually, we have seen decline happen in other metals as well. That is because the dollar index is trading at a 3-month high. There is now just a 40% probability of a rate cut in the month of May after a very strong U.S. CPI data. So you have copper prices trading at a 3-month lows. Gold is trading at a 2-month lows as well. Most of the metals for this week seem to be heading for a weaker closing.
All right, Manisha, thanks very much for that. So that's the commodity and forex update there. We'll take a quick commercial break here. We are back with Deepan Mehta of Elixir Equities with some fundamental stock check. We'll also connect with the management of Jyoti CNC. They came to the market, listed recently, stocks done very well. Numbers in focus for the third quarter. Stay with us.
Welcome back. Well, we listed down all the top stocks that you need to track, but let's get some fundamental analysis going as well. Deepan Mehta of Elixir Equities joins us on the show. Hi, Deepan. Good morning and good to see you in as always. I wanted your view on Mahindra and Mahindra. Yesterday, the numbers didn't look so bad. The problem is that the tractor industry itself is going to go into a bit of a tailspin, it appears so. And normally, I've seen in the past, in election year, we see tractor volumes peak out. So what's your view on the stock from here on? It's been a big outperformer if I look at it over the last 18 months. But now this tractor degrowth, industry for the industry itself will put a bit of a hurdle?
Good morning, Nigel, and thank you for having me on your show. I understand that tractors industry is cyclical, but there's a ray of hope. I think if you look at all the weathermen, they are predicting a very good normal monsoon this year, and that certainly can boost tractor sales. So this tractor softness can be for 2 or 3 quarters or so. And eventually it does come back. I mean, India really requires more tractors. Per capita tractor sales are significantly lower than the global averages. And from that point of view, I think it's a matter of time before farm equipment also starts to contribute significantly as it has been doing so. But in the meantime, I think the auto industry, the auto business is doing really well for them. And the new models have been very well received. There's still adequate booking demand for these new models. And from that point of view, I think earnings can be sustained for at least 2-3 more years for M&M, and valuations are quite reasonable. From that point of view, we have a positive view on M&M.
Okay, let's not forget that the tractor industry had a long upcycle, right? From FY17 all the way to FY23, it was a 10% compounded growth rate in 7 years. So as you said, I mean, it's a cyclical story. At some point, the cycle has to come off. And maybe this is it. But Deepan, I wanted your thoughts also on what's happening with Reliance. It's clearly become the leader of the market now. There was large delivery buying yesterday of 1,500 crores in the stock. Do you think there's more upside here? And what is leading to this up move in the stock, you think?
Good morning, Sonia. I think it's all to do with FII buying. We have been saying for a long time that the FIs have not been buying enough of India. So much of positivity there on the India story. But you're wondering why the money is not coming in as yet. And now I think whatever fund flow is coming in the FI side, they are looking at buying into Reliance because that's the large cap stock. It's liquid. They can quickly, get the position and the allocation which they want. So Reliance is clearly benefiting from that. And the numbers were pretty much decent. The only question which remains is whether demerger is going to take place amongst all the divisions or whether Reliance becomes a holding company. And we have IPO for Jio as well as for Reliance Retail. So that question remains unanswered. But nonetheless, I think value is gradually getting created in the present entity. And mostly, I think it is technicals and a lot of liquidity coming into the stock.
Deepan, hi, good morning. The other one is State Bank of India, right? The almost 15 months of consolidation for State Bank of India. And then last Thursday, it kind of saw a move. It's followed up on Friday and this week as well. A largest contributor to Nifty Bank, etc. But from someone who's looking at this one, Motilal, for example, this morning has got a note out on SBI. And they're saying they estimate a 22% CAGR in earnings over 24 and 26. What's your sense here on State Bank of India? Do you think meaningful money can be made buying here at these levels?
Good morning, Prashant. Yes, I think so. I think, again, the valuations of State Bank of India because of its consolidation have softened up, and you could make a case out for higher price to earnings, price to book for SBI. That certainly can get re-rated, but I was not happy with the numbers which came through from SBI, and that's true for across the board, I think, in the banking industry. I think the pre-provisioning profits have been pretty much flat or low single digit or so. And a lot of the gains in the net profit have come through lower provisioning costs. And once the base effect starts to catch up for lower provisioning costs, then you will see the impact on the net profits as well. That also will start to slow down. So just that caution is there as far as, banking profits are concerned. And this particular argument which you made for SBI holds true for, I think, entire banking sector, be it HDFC Bank or ICICI, Axis, IndusInd Bank, IDFC First. All of these have gone nowhere in terms of returns for the past several months, if not quarters. And once you have the banking industry starting to revive, and that may happen when liquidity concerns ease, and there's less pressure on net interest margin, I think across the board you will see rally in bank shares, and a re-rating is possible over there and amongst the other stocks as well.
Okay. Dipan, I don't know if you track the machine tool manufacturing company Jyoti CNC. They have a large presence in the aerospace division. So I'll just allow you to ponder over that stock. We have the management joining us. The company reported a very good performance in Q3. The revenue surged over 58%. Margins also improved significantly. And even in 9 months of this year, it was an 84% growth in revenues. They have a large chunk of their business that comes from the aerospace division. Param Krishna Jadeja, who is the chairman and managing director of the company, joins us now to talk about that. Mr. Jadeja, thanks a lot for joining in. This time, in just in 1 quarter, it was almost a 60% rise that you saw in revenues year on year. Can you tell us what is leading to this demand surge? Which is the segment that's doing the best for you? And what are the triggers going forward? What kind of growth can you do in FY25?
See, basically, what are our solid order books are there. That is, execution has started now. So that's why these numbers we are able to see it is in a much better way there. And then going forward also, this execution will improve every quarter and quarter, day on day, and numbers will improve furthermore that here.
What's the exact number? What is
particularly these are the sectors. The 2 sectors are significant in our order book also there, and that's improving. One is the aerospace and defense, and second is EMS there. So these 2 sectors are contributing in our growth journey here today.
Sir, can you give us the number, please? What is the order book right now as of today, and how much have you executed so far in this quarter? What is the executable order book over the next 12 to 18 months?
So basically, today our order book is close to 3,200 plus crores are there. And what you saw that 9 months, let's say year on year, we have made significantly close to 80% growth over here. And this quarter we have close to 377 crores as done, and the new orders also we have received close to 275 crores. So total order book today is close to 3,200 plus crores to be there.
All right. Hi, Mr. Jadeja. Good morning and good to see you. And the 9 months are looking very, very good, and the last quarter as well is looking very, very good. But if I look at FY23, majority of your execution came in Q4, and Q4 appears to be the strongest. So what do you end this year with in terms of revenues? Point number 1. You're already at around 900 crores. So what do you end? And also, if you could tell us, your margins, gross margins, EBITDA margins, both for the quarter as well as for 9 months are looking good. What is the sustainable number?
So basically, from here, always the last quarter is a much better quarter for our kind of industries. And execution is always to be better on the last quarter. So even we are expecting the much better growth in the last quarter, year on year growth also here in terms of numbers on a revenue side. So last quarter to this last quarter is going to be a little bit better than that. And in terms of a margin is also, the execution is improving, the operational efficiencies are coming much better where once the top line is increasing, margin, there is still room to improve to be there basically. It will improve.
You end the year, sir, around 1,350 to 1,400 crores. Is that doable?
Let's say if you look at that order book and all, where we are going to do that, this kind of.
I've got the order book, sir, but 1,400 crores, should we take that? And also the margin, you're saying that things are improving. Give us a band, so we'll at least have some guidance.
So we are looking towards to more and more to be efficiency to come on a operational leverage and all. So that margins are also going to be improved there.
And revenue?
Revenue also, let's say the last quarter is always a better quarter. So we are going to improve the revenue from here to furthermore one quarter.
Mr. Jadeja, hi, good morning.
Hi, good morning.
It's a pleasure, sir. And I as an aside, I had the opportunity to use a CNC machine in a smaller setting, so it's a lot of fun. But just a quick word. What's the opportunity size? How many of these units do you make every year? A very basic question: as more and more of this stuff, right, becomes contract manufacturing, right? So not every industrial unit needs one, or every factory needs one, because a lot of the stuff is outsourced. Well, I'm just trying to understand: is that an impediment as contract manufacturing picks up, even on the electronic side, etc., or no?
Yeah, that is the electronic manufacturing side is improving drastically there.
Okay.
And let's say this quarter, it is contributed to close to 12.5%. That was earlier, it was 0. And we are looking to be, this number will improve. And the year end, in the next year, we are looking to be contributing from the EMS sectors close to 25% like that. So there is a significant improvements we are seeing in terms of a number from contract manufacturers in electronic manufacturing there.
Okay. So you're saying 25% from EMS next year is the contribution. Is that going to be the fastest growing area for you? And what are margins going to look like?
No, there are aerospace and defense is a more faster growing areas to be there. If you look at that, in our order book today is close to 58% is aerospace and defense. And we are looking to be, in terms of entire year execution side and in the revenue, 40% will contribution come from the aerospace and defense. Then our margins also is better there.
All right. Mr. Jadeja, we'll leave it there. Thank you very much for joining us. It's a pleasure, sir, having you with us here on CNBC-TV18. Thank you. Well, let's focus on the setup today, the trade setup today. Anuj is here with just that. Anuj, morning.
Morning, Prashant. Well, you know what? Very smart recovery yesterday in market, and it's also emphasizing one thing, that perhaps the Indian trader is really smart. The Nifty and the Bank Nifty both defended crucial levels and closed at days high. Even the Nifty IT successfully defended the 10-day exponential moving average. The big question is, how much of this US bounce back did we price in? Because it looked like that at around 2:30 that the market was playing for this pullback in the US market. It did look like a one-day issue in the US market. But yesterday's price action is a massive boost for the bulls, because what it means is that the market's texture is now firmly buy on dips up until at least 21,500 is holding. And we did mention this point yesterday, that normally global corrections are good buying opportunities. In terms of crude cues for the day today, the troika which was against us is in our favor today. The US bond yield, dollar and Brent have all cooled off. Reliance saw some big delivery buying, 1,500 crores, and it's negating a lot of negative impact of HDFC Bank. In fact, few more days like this, and Reliance could actually overtake HDFC Bank as the top weighted stock on the index. And of course, there's been some leadership from SBI as well. Coming to levels on the Nifty, the first resistance is 21,951 to 21,964. And then 22,050 to 22,126, the prevailing all-time high. The support comes in at 21,706 and 21,740, which is the 10 and 20-day exponential moving average. And of course, the bigger support, the last 2 days low of around the 21,500, 550 zone. On the Bank Nifty, it's still weak despite the pullback yesterday. SBI is taking leadership, but the weight of SBI is only 10% in the Bank Nifty. The only level working on the Bank Nifty, though, is a 200-day moving average. It's clear that there's defense there, which is around the 44,900 mark. Even yesterday, we saw a 1,000-point rally from there. And the next resistance on the Bank Nifty is 46,500.
All right. Thanks a lot, Anuj, for that. Well, let's take a quick break on that note. On the other side, Sudarshan and Shrikant Chauhan will be joining in with some technical trades. Stay tuned.
Okay, welcome back. There's 8 minutes to go for the pre-open session. Sudarshan Sukhani is with us with his trading strategy this morning. Sudarshan, good to have you with us here as always. Good morning. So again, I mean, we'll get a start higher. Do you think this is it, when the market will start to flex and push beyond this range that we've been in?
Yeah, good morning. I think you've said it very well. This is it. Yesterday's surprise rally tells us that the bulls are very much alive and kicking. That dip was bought into almost immediately, and the chances are that we are now again looking at a test of the earlier lifetime highs at 22,200 and maybe even more. So the trade has come just for one day. There was no trade, but the trade is now again buy every dip in the Nifty. Now, this is not the same view for the Bank Nifty. The Bank Nifty still remains in a very large trading range, and that creates a lot of confusion. But for the Nifty, the view is very clear. Buy every dip.
Okay, buy every dip in the market. That's interesting. What about individual stocks? I mean, what are we looking at this morning, Sudarshan?
Well, then we are looking at buying opportunities wherever they come. Tata Motors, after that gap up, had a small slide and is now come down to support. That's a buy with a stop under 900. Telecom is the only intraday short. It's broke down from a support level yesterday. Today it could recover, we don't know. But still, it's an intraday short with a stop above 1310. You know, the theme is to go and buy, not look for shorting. NTPC is a buying opportunity, small dip, find support, willing to go higher, buy with a stop under 323. And finally, that very, very large cap company, Reliance, had those new highs yesterday. That's a buying opportunity with a stop under 29.20. Although for Reliance, I would suggest that the stop should be avoided. Just stay there.
Okay, got that. Thanks a lot for that, Sudarshan. Well, let's get in Chandan Taparia as well, derivative and technical analyst at Motilal Oswal, who joins us on the show. Hi, Chandan. Good morning. Well, yesterday, the Nifty Bank caught everyone's attention. What a big recovery we saw at them. How are you viewing trade, both on the Nifty Bank, and run us through your picks?
Good morning, Nigel. Thanks for having me. We have seen a strong run-up in the market on last trading session. Nifty open gap down, but managed to hold support near 21,515, which is 61.8% retracement of the entire uptick of 1,000 points in recent past. And it formed a bullish candle technically, which clearly indicates that bulls are back on track. An interesting part is that Bank Nifty witnessed huge recovery with support of 44,800 zone. So the way both the indices recovered, we believe some more momentum could be there. So first talking about Nifty, we believe that 21,650 could act as a support to drive this rally to us 22,100 zone. We have seen spurt in the put call ratio as sustained put writing was seen. Volatility index is now hovering below 16 levels, so lower volatility with jump in the put call ratio clearly indicates that again bullish momentum could continue. So we'll go with the bull call spread and we'll continue to be with bullish stance with the view that index can head towards the new lifetime high territory. Talking about Bank Nifty index, now support will be at 45,250, 45,500 zone. Buy on decline could continue for an upside move towards 47,000. And we believe that PSU stocks will do well in Bank Nifty, including SBI, Canara Bank, Bank of Baroda, and selective private bank like Axis Bank and ICICI Bank could support the Bank Nifty index to drive on the higher side. Now talking about stock specific, first that is buy on Maruti. Nifty Auto Index started the positive move after the profit booking decline of last 5 trading session. It has negated its lower highs, lower lows on the daily chart, but major trend is intact. And Maruti is one of the strongest counter heading towards the new lifetime high territory. We have seen coal unwinding at 11,000. Fresh put tightening is clearly visible. So with support of 10,750, we are expecting a run up of 4 to 5% upside in Maruti. So can buy for an upside move to us 11,400 level. Second trading area, there is buy on DLF. Nifty real estate counter or Nifty realty index is doing well. DLF is one of the strongest counter. It formed a bullish candle. We have seen built up of long positions, which clearly indicates further rally to us 880. So one can buy with support of 825. Last trading area, there is buy on trend. The stock has completed pole and flag pattern. Even narrow range price breakout was clearly visible on the daily chart. Longs are already there in the system and momentum could continue. So one can buy with support of 38.30 and trend has potential to rally towards 4100 plus zone.
All right, Chandan, thanks a lot for that. Let's do one thing. Let us slip into a quick break on that note. On the other side, we'll come back with the pre-opening rate. We'll also have Aditya Velekar of Axis Securities to review the Q3 earnings performance of the metal sector. Stay tuned.
Co-powered by
Welcome back. This is Open Exchange live from the CNBC-TV18 Motilal Oswal studio. Well, we have the pre-opening rates that are going to be kicking in a while from now, and expect the markets to open in the green. But there are plenty of stocks that we're going to talk about. Dipan Mehta is still with us, so let's go to him. Dipan, I wanted your thoughts on SBI, which has been the big mover in the last many days. There was, large delivery-based buying yesterday. Motilal Oswal has a note where they have a target price of 860, and they say the best is yet to come in terms of earnings. Do you think there's still more traction on the upside here?
Yeah, Sonia, absolutely. And that's true for a lot of the banking stocks. I think it's not just SBI which has underperformed. ICICI Bank, HDFC Bank, IndusInd, IDFC, I think they all have, been big underperformers in the market. And once you see the banking industry revive, I think the big players, of course, will benefit per se. With SBI and HDFC Bank, I think there's a scope for re-rating of the price to book, price to earnings multiple. And once, we have this liquidity constraints gradually easing out, we may see a better sentiment for the banks per se. But one thing you have to note that for the December quarter, the pre-provisioning profit for a lot of banks was pretty much flat to low single digit. And the net profit gains came from lower provisioning, and that cannot last, very much into the future. You need to have higher deposit growth, higher net interest income, and higher pre-provisioning profits for the industry to, kind of drive forward. So from that point of view, I think maybe a couple of quarters, there may be still some stress on the earnings. But of course, medium to long-term prospects are great for the banking industry and SBI in particular.
Okay. All right. Dipan, thanks a lot, Dipan, for joining in and giving us a view on a whole host of stocks. We look forward to having a chat with you. For the time being, let's turn our attention to the metal space. We have Aditya Velekar, the Senior Research Analyst at Axis Securities, who joins us on the show. Hi, Aditya. Good morning, and thanks so much for joining in. Well, I want to talk about the top focus in the metal space. That's aluminium first up, and then we can discuss ferrous as well. From the aluminium space, what is your pecking order right now? Nalco's numbers look superb, but valuation-wise, it doesn't have support. Hindalco, well, they seem to have, made a bit of a disappointed the street with that upping the capex at Novelis. And Vedanta, forever ignored, but suddenly it's come back on everyone's radar. Your pecking order among these three names?
Yeah, good morning, Nigel. Yeah, so definitely aluminium numbers, we have seen that in the last, in the previous quarter, in this quarter, we have seen that the aluminium margins for all these companies have expanded. Upstream aluminium of Hindalco, they have reported EBITDA per ton of $880 per ton. Same for Nalco, margins expanded to 20%. And even Vedanta aluminium has done well. But at the same time, there are a host of other reasons, as you just described. So Nalco, the valuations are now quite stretched. Hindalco, we have an issue of Novelis capex. And Vedanta, there is a overhang of the debt restructuring at the parent. So the margin of safety at this point of valuation is not very attractive. So if you ask me for a pecking order, then maybe Hindalco first, then Vedanta, and then Nalco.
Got that. All right. So you're still going with Hindalco despite that capex disappointment, because maybe it's corrected 15%, so maybe bulk of the bad news in the price. What about the ferrous space? What's your pick from there? Numbers looked okay for the past quarter. JSW was better, Tata Steel was a little bit better, SAIL, you'll have to adjust those numbers, while JSPL as well was pretty okay. What's your view in terms of these, ferrous stocks? And what's top of the list for you? Because Tata Steel still has the Europe problems. You have JSPL, there's too much of rejig at the top out there. And SAIL is the PSU, it's got momentum, but does it have enough to take it higher?
Yeah, I think, Nigel, the same issue here also. Even for steel stocks, the valuations have rallied quite a bit, and the margin of safety is once again not there. And at the same time, if you see the coking coal prices, they are still in the range of $310 to $320 per ton. Iron ore prices are still elevated, and steel prices are slightly subdued and under pressure. So from that perspective, spot spreads are under stress. And keeping that in view, the current level of stock prices not providing much comfort or upside from a valuation perspective. But yes, if we can look from a pecking order, then I think JSPL is slightly more structurally well positioned, because if we see Tata Steel has issues with their European UK operations, Then SAIL has rallied quite a bit, and structurally it's a high fixed cost business. And then we have so each stock has a story to tell, but as I said, means margin of safety is not very lucrative because the spot spreads are under stress now. So maybe we can keep a buy on dips kind of strategy here with JSPL and maybe Tata Steel. We can accumulate, because if they turn around their UK business in future, and if the Kalinganagar plant delivers a good set of numbers in FY26, if they come up with a good production guidance, then maybe yes, Tata Steel can.
Right. I wanted your thoughts also.
Got
it. I just wanted your thoughts on Hindustan Copper, because the numbers there were quite on the weaker side. So any thoughts on how one should approach that stock?
So copper as a commodity fundamentally is means from a long-term perspective is well placed. The copper concentrates, if you see, there is a dearth of concentrate in the global industry, and TCRC rates will be higher for smelters. So from that perspective, Hindustan Copper, being a copper miner with copper concentrates, with no issue with respect to TCRC, it is a good stock. But at the same time, the valuations are quite stretched. And once again, we don't see the comfort from valuation perspective.
Okay, but it seems it's a story of, I think, 2, 3, 4 years ahead. I'm not sure. Numbers are disappointing yesterday. And from the lows, the stock went up close to around 10%. But as you say, you're not very comfortable. What about iron ore prices? You know, NMDC is going to be reacting to its numbers, and the numbers look quite good. There were 2 price hikes that they took in the past quarter, which already got reflected. And now there are 2 more that they have taken, which will reflect in quarter 4. Your view on iron ore, you know, what are the pricing out there? Any view on NMDC, if at all?
Yeah, so iron ore definitely. I think it's fundamentally iron ore is in a sweet spot, or we can say the prices are may still sustain at a higher level. Just to give a brief background, means in China, because of that, before the lunar holiday, they started restocking, and the prices started increasing from level of $100 per ton and they peaked at $140 per ton. And at the same time, the Indian miners, they started exporting the lower grade ore to China, and they repriced the higher grade ore at a higher level. And with the merchant miners coming down, the level of supply in Indian business, in Indian markets for iron ore has really come down. So there is a supply demand mismatch, especially in India, with merchant miners coming, with less merchant miners and more demand as the steel production is increasing. So from that perspective, structurally, iron ore is well placed. There is a dearth of supply and steel production is increasing. And at the same time, China's iron ore prices have, although they have come down from a peak of 140 to now 128 to $130 per ton, but we have to see now post this lunar holiday how they pan up their production, and how, whether if there is a China stimulus, if a possibility of that comes, then the prices may find support. And NMDC will be beneficiary of this higher level of iron ore prices, and that may reflect in their Q4 numbers as well.
Aditya, so good morning. Number 1, number 2, number 3 stocks that one could buy here on an absolute opportunity basis.
I think we are most comfortable in stocks like Coal India, because the long-term structural story of the coal remains there.
Got it. Coal India, what else? What's the number? What's the second best idea?
We are positive on stocks like APL Apollo Tubes, JTL Industries, which are kind of converters, and they have a structural tailwind from the infrastructure capex and all those stuff. So from that perspective, these 3 provide much more safety, whereas the other stocks I just discussed, there is a valuation issues. So we'll wait for correct time to enter there.
What is the target on JTL?
JTL, we have a rupees 300 target.
All right. So there's still, what, 20% upside, right? More, actually. 25% upside from where the price is at right now. So Coal India, APL Apollo, and JTL are the top ideas in terms of absolute upsides, as Aditya sees it at this point in time. I think Sudarshan is with us with his 9:10 call. Sudarshan, welcome back. What's on your list and what's on your mind?
Well, I consider buying NTPC with a stop under 323.
All right, buy NTPC under 323. Well, actually, we are sort of nicely segueing into NTPC and utilities, actually, because Vivek is standing by with just that, with a focus on that. Vivek, hi, morning.
Well, good morning. Absolutely. So Morgan Stanley today has come out with a very interesting note on the entire utility space in India. What they're saying is that in the next decade, they are forecasting over $550 billion of capex. Why is that? Number one, India is building energy security as well as momentum in the energy transition. Number two, power demand is rising, while supply side constraints are becoming a lot more constrained. What they're saying is that forecast India's power demand to record a 7.4% CAGR over FY24 to FY32. At this point of time, they prefer regulated equities over independent power producers. Now, as far as individual stock is concerned, number one, they've gone ahead and upgraded BHEL. They believe while operating performance is still quite subdued, they believe the incremental pace of order inflow would be very strong as government has gone ahead and increased this capacity addition of thermal to 80 gigawatts by FY32. NTPC, they retain overweight. They've upped the target price. They believe company is the best position to benefit from both energy security as well as energy transition that the government is looking forward to do. Power grid, they have an overweight there. Target has been increased to 296. What they say is that the larger thermal capacity additions will also, by default, lead to higher transmission capex as well, where power grid is poised to benefit. Tata Power, they continue to retain an underweight stance over there, but they increase the target price. At this point of time, there is a recalibration in capital allocation strategy away from utility-scale renewable energy projects and more towards pump storage. And Torrent Power, while they like the company, they believe that current valuation, at this point of time, captures all of the upsides.
Okay, thanks a lot for that. Well, the other stock that we're looking at this morning is Mahindra and Mahindra. So just pull up the stock on your screen. I just wanted to point out that a lot of brokerages continue to be bullish on M&M post the stable quarter that they've reported this time around. CLSA has a buy. The target price has been raised to 2,074 on the stock. Nomura has a buy with a target price of 2143, and HSBC has a buy with a target price of 1900 on M&M. But there are definitely some concerns that the street has. M&M has gone ahead and lowered its FY24 tractor volume growth guidance. Earlier, it was flat. Now they have lowered it to minus 5%. So they're expecting a degrowth similar to what Escorts had done a while back. So that is one concern. The other concern is that the SUV order book has fallen very sharply. The order book is down 21% year on year from November to Feb of 2024. And that is the concern. So two risks going forward. One is if there's an extended El Nino in 2025. And the second is if we see a slowdown in SUV demand, some signs are emerging of that. These could be risks to the earnings estimates. But most of the brokerages continue to still be bullish on the stock, considering that the numbers have been stable in this quarter. In fact, we have the management on earnings in a short while from now. So do stay tuned in for that. But Mangalam is joining in to talk about Zomato and why he's focusing on that stock. Mangalam.
Well, it's a good set that the company reported last week itself, and now there are some brokerage commentary, coming in as well. And CLSA's note is very interesting today. Why is that? Because while they do believe that food delivery and quick commerce are on a stable profitability path, the fact that they do see profitability and growth out there, they've moved their valuation methodology to, the more traditional DCF and price to earnings multiples itself. And in doing so, this recalculation has led them to lift their target price from 181 rupees to 227 rupees. And that makes it among the highest target prices that any of the brokerages has on Zomato. What is their base case here? They're valuing the company at nearly 41 times FY26 price to earnings, which means that they are expecting a near 5,000 crore rupee net profit to come by for the year FY26 itself. And they are ascribing this valuation as a discount to the other QSRs, the likes of Jubilant Food, etc., where, they are trading at around 58 times. So they are not only expecting strong profit growth, they are valuing the company at a discount to the other QSR players as well. They are looking at the FY26 EPS at close to 6 rupees. They believe that, this is their base case and this is likely to play out even if growth is slightly slower than what they anticipate.
All right, Mangalam, thanks very much for that. Actually, Zomato in the pre-open is up 3%. So I think it's going to be a higher start there. Paytm is down another 5%. That's the other stock which actually on the downside has focused so much of the attention. And of course, there are other names, which is the entire PSU space. Metal stocks, for example, have been seeing a fair bit of traction. And of course, the last of the earnings reaction in that sense will also be in focus. Muthoot Finance, perhaps, there's AB Fashion and a few others as well. But the first trade's coming up. I mean, right into the resistance of 21,900, right there at the open. So, that's the last retracement of the fall, and we have opened exactly there. So you've got the Nifty Bank, which is also starting about 60 points higher. Make it 45 now. So we're at about, 45,900. Okay, we had a 50-60 point higher start. It's gone absolutely flat almost immediately. The Nifty, though, is holding just under the 21,900 mark. Sonia has walked across to the wall. She's got more rates. Sonia.
Well, thanks a lot for that. So, I want to start off with some of the stocks, right, which have been in focus. So the Nifty is holding up almost about 0.2%. But yesterday, if you saw Reliance and stocks like SBI have seen large delivery-based buying. So let's take a look at Reliance. Another about in the green, SBI also a tad bit in the green. In fact, for SBI, Motilal Oswal had put out a report where they have a target price of 860 on SBI. They say the earnings momentum is something that can continue. By the way, 2% equity has changed hands on Vedanta. So do take a look at that. The stock is now down almost about 3% And a couple of other stocks that we're looking at this morning. Glenmark saw big losses in this quarter. A loss of 350 crores is what Glenmark has reported. Revenues are down 28%. The stock is up almost about 2.5%. Maybe price that in. Muthoot Finance, strong set of numbers coming in over there. AUM growth of 23%. The earnings beat street estimates. So Muthoot Finance looking pretty good. M&M, I would like to see how that one is reacting. Remember, the company has scaled down its tractor guidance, but overall numbers are stable. And most brokerages have a stable view on that. In fact, CLSA has raised their target price to 2,074 on M&M, and they say it's a strong growth in the SUV segment that M&M has seen. Apart from that, a couple of other stocks like Zomato also continue to be on our radar, so keep an eye out on that. And some of the other names reacting to their numbers as well. You have, NMDC continues to see traction there. It's almost a 5% rally on NMDC this morning, and volumes are also piling up on that name. So a lot of PSUs continue to be in action. Otherwise, the Nifty is looking pretty good, up about 63 odd points. The Nifty Bank also well in the green right now, 50 points higher. Let's see how it goes from here.
Well, from the broader market, so quite a few stocks actually are moving around. BEML Landwell, that stock is up close to around 5%. HPL Electric, that stock is up close to around 10%. So big move out there. Satluj Textiles, we don't talk about this very often, but that one as well is coming as one of the top movers on the upside. So that stock is up and about. IRDA, yesterday it moved up close to 5% in the final hour of trade. Well, that stock today as well is building onto those gains. Genesis, those numbers look very, very good. I recall the management coming on the show and in fact saying that there is big potential. Appears finally they're delivering because it's been a rank underperformer otherwise. So that stock is up and about in trade. Paytm, as you mentioned, is still down close to around 5%. Dhanlaxmi Bank is up close to 5%, one of the top volume movers. And NBCC, numbers look good. Stock has come off a little bit from the top, but the quarter 4 numbers will look far better. And finally, I think Suzlon is bucking the trend up and about yet again.
I mean, so yeah, things are sort of opening very, very vibrant in that sense, right out of the gates, as we have seen for the last many sessions now. So just holding at the opening level, which is the sort of 21,900 mark at this point in time. Let me just take a quick look at a few other names. Maybe we could look at Muthoot Finance and how that one is starting. The Vedanta block deal, as Nimesh was highlighting in D-Street Chatter, that has gone through. 2.6% equity has changed hands, and that is worth about 2,600 crores. I think it the stock started about 3.5% lower, but it's basically picked up from there. Yesterday, there was some news on the Supreme Court observations as far as the Tuticorin copper smelting plant is concerned. I mean, that was the margin positive. There is arguably, and we'll know more in a bit from now in terms of who the seller, etc. is, but this is fundraising. I mean, so things are moving for Vedanta. We'll have to make a determination and if it really is meaningful. We had a bit of a inflection point there. So Vedanta in focus. But otherwise the market, I think, is just sort of holding on with some of these gains and moves that we have on our hands. So 60 points on the Nifty is what we have at about 21,900. Sonia.
There's another large trade actually that's taken place on Yes Bank. I'm not sure who's the parties, but large trade, I think, close to around 2% equity. So just want to highlight that as well. Sonia.
Okay, so many other stocks, right, that are looking good. I mean, the sensex is now up almost 200 odd points. It's very interesting what's happening with Glenmark. Despite the company reporting huge losses, revenue fall, etc., Glenmark is actually up 5% right now. So I think pharma in general has been a bit of a flavor for this market. IRDA is up almost about 5 odd %. So some buying interest coming back there. Inox India is up about 4.5% at 1,090. So that stock also has been a very strong performer ever since its listing that came through.
All right, well, more stocks in terms of what's happening and moving around in just a bit from now. But Sandeep Tandon is our market master today. He's founder and chief investment officer at Quant Mutual Fund. And of course, he needs no introduction. He's a 30-year veteran in the markets. Has now, of course, built a mutual fund business, which is sizable over the last 3 years or so. AUM of almost 60,000 crores now. Sandeep, it's a pleasure having you with us here on CNBC TV18. Thanks very much for your time. We spoke exactly a month back in an extensive way, but we just want to talk to you today about a few themes. First on the mind, of course, is what's happening in the entire PSU space, Sandeep. You've been an early backer of many PSU stocks, PSU banks, railways, defense, but you're also someone who's very nimble and fast in moving in and out of things. You have a new PSU fund. The NFO, I think, is closing today for subscription. So just talk to us about your thinking in this space and, what are the top bets where you are live with positions in the PSU space, because it's a wide area with lots of sort of sectors and exposures. Go on. Sandeep, you'll have to unmute yourself, please.
Yeah, Prashant, my mistake. Okay. So, Prashant, as I have explained you earlier, that I'm bullish for a decadal call for the value as a thesis. Okay. And PSU, obviously, theme fits the bill for that. Okay. Now, let's look at something has changed, that I've been talking about for a while. Okay. And market is not willing to accept that change, and it is a very human phenomena because something which has not performed for nearly 2 decades, okay, or last 15 years, something has not delivered, and last 10, 12 months, they give a decisive move. So people talk about is just catching up. So the mistake which people make, whether this is just a pullback sort of thing or catching up trade, or this is something has changed. We believe that something has changed from India perspective. And given the scale and size the PSU companies have, I think it's a very meaningful change which is happening. Look at from the governance perspective, the governance levels are far, far superior which had in these companies. If you look at the capital allocation, which has been a very biggest concern in the public sector stocks for a while and is there for many decades. And a lot of people have worried about the political aspect also, if the misuse happen, okay? Now you look at in last 10 years or last 5 years and last 3 years particularly, okay? I'm observing these things. Initially, we also thought, so let's play this as a value thesis because it fits the bill, it's a part of value. Then in last 6 months, we realized that something radically has changed the way we look at PSU. Multiple data points when we look from our perception analytics are endorsing that this move is not a very short-lived or medium-term view. This move have more legs, okay? And it could be a decisive move from a longer-term perspective. That's the way we thought of launching the PSU fund. A lot of people have raised this point. They have already rallied. Now you're launching, so you're known for market timing. So whether are we coming at the peak of the cycle? We got such mails from retail investors, distributors, okay? The only point I say is if something big is change or is changing, and if we are able to identify that big change, then I will like to participate in that big up move rather than saying that this could be a temporary or medium-term top. But I always say that if you are in a decisive bull run, which is the case in value as a thesis or PSU as a thesis, then definitely no moves will going to be linear. You will see sharp correction and sharp pullbacks, okay, and which we have saw very recently because yes, they were overheated. Some of the junk also within PSU basket has rallied significantly. So it's a bound to have those healthy correction, and again they have come back. So let's look at purely from a behavior perspective. Majority of the market participants still deny this thing, okay. For them, PSU is a negative territory list. They don't participate. They have not participated for decades. So why suddenly they will have to change their mindset? That's point number one. And second thing, even somebody participates, okay? Because people participate with a compulsion of underperformance. Just to avoid underperformance, people participate because it tests their patience. And when any reaction happens, then these people react first because it is like for us, it's an erosion in the profits because we were very early. But if somebody has bought at the peak of the cycle or when they're moving up now, buying and participating now, it's a loss in their capital. So the treatment is very different. For us, is a loss in the profit, and for somebody is a loss in the capital. Then he or her reaction will be very different. So largely, I think it's a thesis which I believe has more legs.
Okay, so
Sandeep, but you have a fund now. So you're basically saying that you're collecting money and you're saying I'm going to buy PSU stocks here from where they are and make money for you, right? So that's what you're saying
correct.
with that fund. Yeah. So hence the question: where will you make the maximum money in this space now, PSU space?
I tell you, our focus will be the large PSU companies. Okay. Because we have seen extraordinary euphoria or hype getting built around low float companies or smaller companies where the moves have been very, very ridiculous, if I have to say that. But our focus will be the large PSU. I think they are still relatively very cheap. Relative, I'm again using the word, if you look at an absolute basis, they also have multiplied. But relative to the market, relative to the benchmark, relative to the particular sector, they are still very attractive. So larger PSU themes, whether you talk about OMC, whether you talk about metals, whether you talk about mining, okay, whether you talk about PSU banks, those are the areas which we look at, including railways also. So it's a theme which you have to play, but we like to play a bigger theme, bigger companies, bigger large market cap companies rather than buying for a very low float companies.
Okay, so you said OMCs, metal, mining and PSU banks, the larger names in that PSU basket. The two other pockets, one you briefly discussed, defense and railways, right? You've seen massive moves here. Do you think if someone's missed the bus in these two spaces, is it still not too late to get in?
See, if you really ask me defense as a theme and railway also, if you really talk about, for us, manufacturing is a larger thesis. We say it's a decadal call for a manufacturing thing, and obviously defense fits that bill perfectly. But the challenge is that they have rallied a lot. Okay, earnings are yet to come. All these companies have rallied purely on the order book position. So we have to understand up to what extent the upside is priced in, or up to what extent is spending. My personal assessment is that up to large extent is being priced in, and hence they will also move, but that ferocious move we have seen will not be there. So maybe they will stagnate, consolidate when we wait for earnings. So I'm not saying that they will fall and correct sharply. Okay, smaller correction or brief correction, what we saw recently can happen, but the upside could get capped in these names. Okay, where the larger thesis of PSU which you're talking about, which is still a very attractive, very fairly liquid names, those are the names I think money will shift. And I always believe that this year retail participation is good and will remain equally strong. What I expect that FDI and FPI could be record participation come in the 2024 calendar year 2024 I'm talking about, because we have seen the signs of nervous global investor who has participated in China not made money. So there's an urgency to shift money, and that's the reason whenever fall will happen very sharp, you will see a lot of money will be attracted towards Indian markets.
Okay, all right. Hi, Sandeep. Good to see you. And Sandeep, just hold on to that thought. Just want to highlight what's being flashed at the bottom of your screen. You have Muthoot Finance. They mentioned in their con call that they're trimming back their guidance. I think earlier they were talking about 15 to around 20%, and now they are putting it at around 15%. So because of that, I think the stock, after opening up well in the green, it's come off a little bit. Currently, it's moving to the low point of the day. There's a guidance cut with regard to their loan growth forecast that they had given earlier. So it explains why that stock has come up. But Sandeep, good to have you on the show. And, something that the street has really been focusing is on how you've got into these PSU metal stocks at the right time. You have got into some of these at a third of their prices. But at current reckoning, how do you, justify that? I'm talking about stocks like Hindustan Copper, Nalco. They're still trading at very, very hefty valuations. So you got in early, but at current reckoning, do you still think that they're a buy?
We are holding Hindustan Copper for nearly 3 years now. Okay, and obviously we have added even last year also. See, Nigel, the point which I want to highlight that we are a macro house, and we were able to spot that trend very early. So right from beginning 2023, I have been talking about metals as a theme. If you go back and 1 year back also in our portfolio, you realize we have built a very large exposure. And every forum I have talked about, don't start linking metals as a sentiment linkages with the China market or the dollar index. Okay, and this is the mistake which a lot of people did. Okay, by looking at the China is not going anywhere, dollar is appreciated. They missed out this move. Okay, those correlations, to be candid with you, in a very dynamic world, are not very acceptable now. It's changing very fast. So this myths a lot of people have with the inverse correlation with the dollar index and the commodity price, those has collapsed long back. So if you are able to dissect that and then move on, look at the move which is there in the PSU or the metal basket. Most of the stocks are trading a lifetime high. Okay, where the perception for China or the DXY has not changed a lot even in the last 1 year. So it's an India-centric story, demand-centric story. And even we have a much larger thesis for mining as a theme for 2024. It's not only for India. We believe globally, okay, mining stocks will do very well, including countries like Australia should do very well, given the background they have not performed for the last many years. I think whether you talk about lithium-related thing or Australian mining companies, coal company, I think this year, that's what our predictive analytic thesis is, that this year belongs to mining. And obviously, if you have a combination of PSU and mining, then becomes a deadly combination that PSUs are doing well, minings are doing well. PSU mining becomes by default the best choice. So it's a much larger call, much larger thesis, global shortage. People are now talking about copper will be more visible in 2026-27. So it's a big call which we have taken much earlier, and like to ride, not getting upset what happened in very recently, where 2-3 days of sharp fall happened. Most of the metal stock corrected like between 15 to 20%. For us, like I said, it is a loss in the profit, not in the capital. So it's a very larger thesis call for us. We think still in the early stages.
Got it.
So I like to ride those things.
But now, Sandeep, just a couple of points. I think it's important for retail viewers who are watching, and most of your investors are retail investors, a new mutual fund basically. So they follow you. But what you're saying is, you said in PSUs, early investors, I mean, like for example, you said you bought names like Hindustan Copper 3 years ago. Early investors, if stocks fall, and it's possible, you're risking profits. But new investors in many of these areas are risking capital when stocks fall. So that's an important kind of mindset to go in with, because stocks have done so well. Would you say that the PE re-rating is largely done, and now it's earnings have got to come? Is it broadly the way? One has to be much more discerning in that sense, Sandeep.
So two ways of looking at it. And let's say in this case, yes, P expansion has happened first, and then earning expansion will be more visible. Then it's a like phase, So P expansion happen, earning happen, then P expansion further happen, and earning expansion further happen. So that's the way cycle gets built. Okay, in some of the companies, like look at the new age companies, when they came, there was only earning expansion. Frankly speaking, it was not earning itself; it was a more of a price to sales multiple expansion which happened. And when they corrected that multiple deterioration happened first, and earning has started coming in right now. But P deterioration or the earning, the multiple deterioration was very meaningful. So I think in this case, when you talk about PSU as a theme, I think it's a combination. P has already expanded. Yes, I agree.
But
it has expanded up to that extent. Compared to private sector or compared to the benchmark, answer is big no. Now, a lot of people believe that they will trade at significantly discount, which I disagree. Yes, they will trade discount to the best global names or the private sector names, but they will not trade at significant discount. So that you have to understand the multiple expansion, particularly in large PSU stocks will happen further even.
We've had many of these. You're a contrarian investor. You look at sentiment as an important input when you make decisions. You don't own any HDFC Bank. Has sentiment bottomed? I mean, at least one piece maybe. And what's the thought process? Briefly, Sandeep.
So if you generally look at we have been very cautious on the private sector banks for a while. I don't think we own any of the large private sector bank in our portfolio. So if you look at like purely from a valuation perspective, yes, they have been very attractive, but again, that is also very subjective, whether this multiples can last for longer term perspective when your earning deterioration is happening, okay? Particularly the credit growth is also not coming up to that extent. So our view is that if you ask me whether these stocks have hit the most neglected zone, hated zone, the answer is big no. Okay, they have not reached. Now question comes, if you are in a decisive bull market, whether you will reach in this cycle or not, that becomes a big question mark for us. And that is something we are watching very closely. For us to go all out and say, yes, this is the time, like the way we did in pharma, the way we did in PSU or metal, I don't think that time has still come. And that's the reason we're happy to hold PSU banks over private sector banks in our portfolio.
Okay, I remember that conversation we had, right, on our Smart Money show a couple of months ago, where you said that, find these companies that are in the neglected, hated zone and are still doing quite well in terms of earnings, etc., and lap them up. You also have a big exposure to Reliance as well as, the whole telecom basket, to Jio particularly. I wanted your thoughts on Reliance because it's now sort of emerged as a leader in this market uptrend. Do you think there's lots more to go on the upside, and what do you think are the triggers that is driving this stock?
So, Sonia, let me explain Reliance in a detail. If you recollect till 2019, Reliance was slightly neglected, and we have been bullish actually from 2015 we talked about. So when a lot of news-driven, event-driven action happens, so Reliance started trading by, like, if I am to say that by September 2020, they started hitting the most admired territory after 5 years. So a lot of news-driven, lot of participation happened, and that's the time we actually exited. But if you really look last few months in mid of 2023 onwards, we have started building exposure. So I will not say that Reliance hit the extreme hated zone, but it started trading in the neglected zone after massive euphoria, which we saw in 2020. And since then, we have seen some amount of consolidation happening. People have started giving up because stocks were started underperforming. Now, our thesis is that if you give valuation for renewable energy in a different manner, or the new age energy company, which Reliance is getting into it. You talk about retail, some of the retail companies quote at absurd multiple. When you talk about, you leave this telecom also, most of the companies are in a most admired territory. So if I look at O2C, if you leave it, your market may not like to give that much value, but ultimately generate huge cash flow, which support other businesses. So if you look at in totality, if I look at the summer part valuation relative to now in absolute terms, you can say anything, but in relative to market, how other companies are treated, we felt this company was grossly underpriced at the price which we started participating. I think it has still potential. If we have taken a 10% bet in our portfolio, that's the maximum which I go. So most of the portfolio is 9.9% Reliance in our portfolio, which a clear indication is not a contra call, it's a data-driven call, and with the conviction that has a potential to participate. As far as Jio is concerned, that's a very different call for us. As I said that we have been talking about that leverage economy as a concept, relevance will decline. And with that background, we believe that banks are the biggest beneficiary of leverage economy as a concept. I think something is changing in our banking globally. Banks will not exist in this form in the next few decades. And we are getting early signs of deterioration. And that's the reason Jio is is a publicly disclosed information. We own a large chunk of our portfolio.
Sandeep, I had 30, sorry to interrupt. Yeah, sorry to interrupt. I want to squeeze in, so maybe just a 30-second response. Have you looked at Paytm?
Yeah.
Just off that, somebody I was talking to was saying the Jio Financial market cap is 1,80,000. Paytm now is 20,000 crores. Have you looked at Paytm at all? No.
No, initially we didn't participate when the IPO happened. We recently, a few months back, we did participate and we exited also. The challenge with the Paytm is that right now, obviously, it has unknown risk which has hit them. Okay. But I have to look at if you ask me Paytm as a concept, yes, I don't find too much problems at the current levels, but there is a regulatory risk which is there. Okay. And this is the stock which is grossly over-owned by private equity. So, and they are exiting at every level. So that's the supply keeps on happening in these stocks. But I think without commenting on individual name, I think as a concept of this whole space of payment gateway or DigiBank as a concept, because I believe digital banking will be the new reality much earlier than what people are thinking. And so Jio fits the bill from a larger thesis in that manner. So it's a much larger call. It's not a few quarters call also. We are taking a strategic call in that company from a longer term. That's the reason we sold all the NBFC and converted into Jio for our portfolio.
All right, Sandeep, we'll leave it there. Thank you very much for joining us. It's a pleasure. Great conversation as always here on CNBC-TV18. Thank you very much. And hope to have you back soon again. Just a quick look at the market, which has, by the way, cooled off. The Nifty has just got about 10 points I mean, it's down 10 points from being up about 60, 70. And that's what we were talking about in the morning. You know, the GIFT Nifty and the Open, etc. is fine, but it's got to be sustained. And that, at least, we're not very sure. It's not clear whether, you know, that 1% pop that we saw overnight, I mean, it's got the basis for a bigger build out here. A few names, by the way. Market breadth is strong, 3:1. Over 3:1 is what we have in terms of advanced decline ratio. 1,600 stocks are higher and about 500 stocks are lower. You know, the big movers right now, maybe just a quick look. NMDC is the top one, is up another 5% right now, 247, almost 250 now on NMDC. MRPL is up 8.5. MRPL and Chennai Petro both were some of the biggest gainers that we had yesterday. CPCL and MRPL. National Fertilizer, NFL, that's up about 12% right now. Inox India, we should put up huge volumes. Yesterday ended 10% higher. It's up another 8% this morning. So these are where the momentum is kind of in. Torrent Power is up 6.5%, 1,200 plus on Torrent Power. You've got Irida, which is up about 5% right now. Tourism Finance Corporation, one-way kind of a move, sharp correction. That's coming up on the screen with large volumes right now with a 5% gain. And there is stuff like, I think fertilizer is a theme, right? I mean, I mentioned NFL, but look at RCF as well. And FACT is up. So maybe keep an eye out on that particular space. Usually moves higher together. Jubilant Industries, Jubilant Pharma are some of the other 5-6% kind of gainers that we have on our hands at this point in time. So yeah, I mean, lots happening. Nigel.
Just want to highlight a few more stocks. Glenmark Pharma started off well in the red. That's recovered all of its losses. It's moved into the green. That's a 5% recovery from the day's low. And Muthoot Finance, the stock opened gap up. Then no problem with the numbers. The problem was they went ahead and they cut their guidance, as Abhishek, my colleague, had told us, and we had flashed that for you on the screen. Because of the trimming down of guidance, that stock has come off close to around 4% from the high point of the day. And Aditya Birla Fashion as well is seeing a bit of a knock. The other one that's moving well from the F&O basket is Torrent Power, flying away up 6% as we speak. And a couple of other names like Genus Power. Yesterday it was down 10%. The street didn't like its numbers. Today it's trying to pull back some of that, up close to around 2%. Sonia?
Okay, just a couple of more stocks, right? The biggest Nifty gainer right now is M&M. So the stock is up almost about 4% and brokerages continue to be bullish on M&M post the results yesterday. So 4% rally there. CLSA has actually raised its target price to 2,074. Nomura is one of the most bullish on the street at 2143 and HSBC is at 1900. Of course, there are some concerns. M&M has gone ahead and lowered their FY24 tractor volume growth guidance from flat to -5%. Also, the SUV order book has fallen sharply, and that is one big concern that the street has. The order book is down about 21% year on year. So two factors, right? Extended El Nino in 2025 and perhaps a slowdown in SUV demand are some concerns. But for now, the street is looking forward and the stock is up almost about 4%. In fact, my colleague Parikshit is in conversation with Anish Shah, the MD and CEO at M&M. So let's cut across to that conversation.
Well, the Mahindra Group has announced its Q3 results with consolidated revenue coming in at 35,299 crore, up 15%, and profit after tax up 34% at 2,658 crore. The company has seen strong performance across businesses except for Tech Mahindra. The management says that financial services business continues to deliver strong performance and the company's growth gems are well on track to achieve 5x growth. Let me go across to the MD and CEO of Mahindra Group, Anish Shah. Mr. Shah, let me begin with the auto business. Q3 volumes coming in at around 211,000, up 20%. Highest ever utility vehicle volumes at 119,000. But the order book has fallen sharply quarter on quarter. This has been a big concern. Going forward, what kind of demand momentum do you see?
Parikshit, good morning. And we are very happy about the results this quarter. With regard to the order book specifically, this is a positive actually. First, in December, we always prune down the order book. This is something that is a regular feature in the auto industry. And second is that because we've been able to increase capacity, that has brought the order book down. In fact, our goal is to bring it down even further so that we can bring down wait times. One of the biggest challenges we face today is that consumers have to wait a long time for our vehicles. That has come down with the order book coming down and with our capacities going up. And that will come down even further. So that will enable consumers to get cars faster We're seeing very good demand for them. We're seeing very good growth numbers. And therefore, the focus for us is really to drive growth, to be able to deliver the vehicles to the consumer on a timely basis, and therefore have a manageable order book.
Right. Now, speaking about the market share in the auto business, though you're not in the CNG segment, entry-level cars or sedans, but the market share has been around 9 to 10% for several months now. How do you plan to increase the market share here onwards, and what will be the pillars of this strategy?
So for us in the SUV segment, the market share is 21%, even though we don't play in all the segments of SUV. And we're number one from a revenue standpoint. So we're the largest SUV maker in India today. In addition to that, as we look at LCVs, we have a 49.6% market share. And that has been steadily increasing over the last few quarters as well. So we're playing in the segments that we want to. And we feel that we can have very strong differentiated products in these segments.
Just speaking about the farm business, it has been under stress. The farm equipment sector margins have been down 80 basis points. The revenue has been flat as well. The guidance on the tractor business is also not positive at this juncture. Give us a sense of the stress that you see in the farm equipment segment, the tractor segment, and your outlook for the coming quarters.
So there has been a lot, Parikshit talked about rural distress, but we're not really looking at it as distress. If you look at it over a slightly longer time period, just over the last 3 to 4 years, the year immediately after COVID, the tractor market grew 27%. So if you look at the average growth over that 3 to 4 year time period, it's fairly reasonable. This year is going to be, in our view, negative 5%, but that also is a function of some of the festivals and Navratras coming around March and April are impacting it by a few percentage points. And overall, yes, this is a slightly slower period in the farm business for us, but it's something that really doesn't concern us. Margins for this quarter, as we explained yesterday, have been impacted by a certain one-time impact, but margins have been again fairly good and steady for us. And it's one business where we have seen in the past cyclicality. And this is part of a cyclical downturn in a sense, but this cyclical downturn is far lower than what we've seen in the past.
Right. The farm business is currently generating an EBITDA loss of 20 to 30% according to certain reports. When do you expect overall farm business margins to return to normalcy, and when do you see improved operating performance?
So the farm business margins are not that far from normal. If we look at a margin trend, they have gone up a lot. And what we have also shown in our analyst meeting yesterday is, despite some of the volatility we see in the industry over the past many years, we've been able to keep farm margin fairly consistent. So we are just probably about 50, 70 basis points away from our normal. And that's not that far a gap. In fact, we should be able to increase it as we go forward as well.
Right. Now, speaking about the demand for automobiles, coming back to the SUVs once again, what kind of demand do you expect in rural versus urban? And do you see a moderation in demand for SUVs? Are you seeing some sort of moderation in demand overall across the industry?
We have not seen much moderation, which is, I guess, a function of the models we have and the strength of those models. We do keep hearing about moderation across certain parts of the economy, but we haven't really seen that. So, as I say, for us, we're not really seeing anything around rural distress or anything in that sort. We are seeing a fairly reasonable market overall.
Right. Now, coming back to the regulatory ecosystem, this is also a year, this calendar year, when you're really going to push ahead with your electric vehicle strategy, the Born EV strategy. And you also told us in previous interviews that you may bring an EV to the market, another EV to the market earlier than expected. But looking at the changes in the ecosystem which are being discussed right now, the government is keen to have the likes of Tesla, VinFast here. There is a new EV manufacturing policy that is being discussed, essentially giving duty concessions to companies who commit to manufacturing in India in a 2 to 3 year time frame. What would be your view on this?
So Parikshit, our message to these companies is, if you believe in India, then make in India. It's not fair to consumers if companies just import from outside without a commitment to the market, especially in the auto industry, where the consumer would look for a commitment that the company is going to be with them for a long term, for the duration that they have the car. India today also is in a very strong position globally. And we've got a very strong focus on Make in India. And that really should be the path forward for us as we go towards a much stronger economy. We've got a large number of foreign makers in India. The auto industry has been a very competitive one for the last 20, 25 years. And at Mahindra, we've actually benefited from that competition. The cars that we make today are world class. The models that we've delivered over the last few years have been beating the others hands down. And as a result of that, we welcome competition. So we would welcome folks to come in India, but our basic message to everyone is, if you believe in India, then make in India.
Right. Now, if they are given duty concessions, how would this impact the local industry, companies like yours who have invested heavily in localization and capacity building over the last few years?
Parikshit, as I said, we compete very well, and our sense is that Make in India will prevail because that's really what the economy needs, and we shall see where that goes.
All right. Now, speaking about the uncertainty and future of FAME, if stopped right now or extended only for a 2-year period as being proposed by the Ministry of Heavy Industries currently, how will this impact the industry? Though we've not seen the final contours, there is only a proposal that has gone to the Finance Ministry and we're awaiting clarity.
So on that, Parikshit, we will have more details only when we have that clarity. So we'll wait for that and we can have a conversation at that point.
Right. Is hybrids a model that you would be considering as you focus heavily on EV transition?
So we are ready with hybrids. In fact, we had to make a choice whether we go ahead with hybrid or EV or both. And the choice we made was to go with EV because hybrid is really an extension of ICE. If we look at the benefits of hybrid, one, it has slightly higher fuel efficiency. Emissions are more or less the same, and the cost is higher. So hybrid doesn't really change the game as electric does. The EV ecosystem will have a significant change, a much better set of products, much lower operating cost. Emissions are close to zero or zero as such. And therefore, that's really going to be the path for the future. That requires some incentives which the government has put in because a number of things have to change for that. That will have some hiccups as we go on as well, as we've seen in economies around the world. But we also have seen economies where the EV share is 90% now. And therefore, that is the future for us. And that's what we feel is the right place to go to.
Right.
So that's been our plan so far. If consumers want hybrid, we will give them hybrid. But for us, that's really an extension of ICE.
All right. Now, speaking about Tech Mahindra, what is the company doing in terms of review of operations? What measures will this entail to ensure growth? The company has reported a 60.6% year-on-year drop in net profit at 510 crore for Q3.
So Tech Mahindra is really going through a reset here because a number of things have to change. We have a new CEO, a new Chief Operating Officer. There's been a very significant revamp in the organization structure to focus on core operations as a key strength that the company needs to build. It's always been very strong from a customer standpoint, and the operating strength will add to it. So the path forward for Tech Mahindra is really to excel and perform ahead of its peers. And that is a path that we are on right now. I call it a turnaround path, similar to what we did for Mahindra Finance, which we started about a year and a half ago. And that is working very well. Tech Mahindra, with the new team in place, we have all the confidence that that team is going to deliver on that turnaround path that's set out for them.
And finally, any possibility of reducing the workforce? When do you expect to return to profitability for TechM?
TechM is profitable already. It's just a question of profit growth. And that is something that we expect starting the immediate fiscal year in any case. So it's about strong execution on TechM. It's actually a company that has been built well, that has a tremendous amount of strengths. And as we've gone through what I call a reset here, it's really to make the company stronger.
All right. Thank you very much, Mr. Shah, for joining us on the program. And with that, it's back to Sonia and our markets team in the studio.
All right. Thanks a lot, Parikshit, for that. Well, for the market, it's absolutely flat. But what we do understand is that the mid-cap index is picking up a lot of pace. So the mid-cap index is now up 350 odd points. A lot of big movers. MRPL is up almost about 11% and big PSU banks moving around this time. So SBI is, of course, in the green, but you have other PSUs like BPCL, which is up 3%. Coal India is up 2.5%. HPCL is up 4%. So oil marketing companies are on an upswing. Let's do one thing. Let's take a quick break. On the other side of the break, KP Mahadevaswan of NBCC will be joining in for their Q3 earnings. Stay tuned.
Corporate.
Welcome back. This is Corporate Radar on CNBC TV18. Well, let's do one thing. Let's talk about some numbers now. NBCC, it was a steady quarterly performance for the company with a healthy growth in profits and revenues, while their margins also expanded. KP Mahadevaswan, who is the Chairman and Managing Director at NBCC, joins us now to talk more about that. Mr. Mahadevaswan, thank you so much for joining us. It was a good, decent quarter for you. Revenue growth of 13%. The EBITDA has gone up almost 23% this time. You have put a guidance of FY24 revenues to be at 11,000 crores. Can you just tell us whether you are on track to achieve that guidance and what kind of execution are we looking at in Q4? And also for FY25, what kind of revenue guidance would you put out?
Good morning, Sonia. For 25, our guidance is around 13,000 crore rupees. For 23-24, we'll definitely cross more than 10,000 crores. So we already achieved 6,300 crore up to December third quarter. So we will definitely achieve another 4,000 crore rupees during this last quarter.
Okay. All right. Hi, sir. Good morning. Nigel on this side, and good to see you in. So this year it will be around 10,000 crores, little lower than the 11,000 crores that you were guiding for in the past. Could you tell us on the operational margins front, what are you looking at? I think earlier you were talking about roughly around 6.5% of margins and PAT of around 5%. So for this year, you'll do around 650 crores of EBITDA with PAT of around 500 crores. Just want some clarity, sir.
Yes, definitely. 10,000, I am saying minimum 10,000, but definitely we will achieve 10,500 crore. So the profit margin also, it will be increased. PAT will be, currently we are more than 5.5%. Yes, of course, last quarter is there. Last quarter is crucial for us. Definitely we will going to achieve this PAT margin or even EBITDA margin also.
So 500 crores and 650 crores is going to be achieved this year, right?
Yes.
Okay, sorry, just to sort of, revise the numbers, what you're saying, 11,000 crores in revenues this year, right? That's
yes.
Or 10,000 crores.
10,500 to 11,000 in between. 10,500 definitely. Because what happened, actually we are targeting 11,000 crores due to graph, imposition of graph in Delhi. We are doing 7 GPRA and Amrapali projects. Delhi actually lot of issues are there. One is pollution, other one is the farmer strikes. With the farmer strike and graph, I don't know. That is the reason I think we're going to reduce our target. But anyhow, we will cross more than 10,000 crores.
And are you putting out a guidance for FY25 right now?
13,000, more than 13,000.
More than 13,000 crores in revenues. And, and margins?
Margin around 600 crores, more than 600, 700 crores.
Okay.
So can you tell us a little bit about the real estate business as well? Because over there, your revenues have fallen by 11%. You're sitting on a base of around, I mean, it's a very, very small part of your overall business, but just want to understand, do you expect to see more pressure there?
Yes, ma'am. The real estate, Sonia, we are going to start two new projects, one in Jaipur and one in Coimbatore. So, and already we have some real estate project that we are going to sell. So after selling only, we'll book our turnover. That is the reason. So that
once you have to give the handed over to them, then only you can book the turnover. That's where we are dropping. But in the last quarter, we are going to achieve the real estate also.
But do you have any number in mind? 100 crore quarterly revenue run rate? Anything that you're looking at?
I think 125 crore for in the next quarter, this quarter, coming quarter.
Okay, so in the near term, maybe this number will be 10.5, 11,000, 13,000 crores. That's fine. But I think for the next 5 years, the outlook is you're going to do revenues of close to around 25,000 crores.
Yes,
is that correct?
Yes. Next 5 years, 25,000 crore.
25,000 crores in the next 5 years with margins of around 5%. So you'll be doing 1,250 crores with a 5-year horizon. I think you'll have given that number in the past.
I have given 1,250, but we will achieve more than 1,250. It will be, I think, around 2,000 crores because we are starting our real estate projects wherein we will get the profit of around 25 to 30% profit. Whereas in PMC, we will get 6 to 7%. So after next 5 years, our profit will be around 2,000 crores.
Okay, my only problem is, sir, the work on ground currently, I understand, is around 20,000 crores, right? That is currently underway on ground. But for you to get to this number of this, 25,000 crores, you should be having some visibility, maybe of around 75,000 crores. Tell us more about that. How do you manage to achieve this?
Currently, we have a work order of around 55,000 crores. And we will during this year, we secured 10,000 crore work order already in the last 10 months. Another 2 months we have. And in the 2 months, we will going to get at least minimum 10,000 crores. So the business, we are securing more than 20,000 crores in a year. So definitely the target, whatever we are setting, it will easily achievable.
So I was talking about work on ground, not on the order book, but you're sounding confident that you're going to achieve that. So we'll take that. Yes, please go ahead.
Yes. Definitely we'll achieve.
Right.
During this year, we already awarded 6,000 crore work order. In 7GPRA, due to some issues, because it is a self-sustainable mode project, we have to earn the revenue. We have to generate our revenue, then only we can spend. So presently, we have sold almost 10,000 crore work in Naroji Nagar. So we have sufficient money and we have clearances also. So during next years, it will be through.
Right. So margins, you said 600 crores EBITDA, 13,000 crore revenue in FY25. That's about 4.6% in margin. Would that be correct?
No. I told 2,000 crores. I think 2,000, at least 2,000 crore profit will be there. PAT will be 2,000 crores.
No, I'm talking about EBITDA, sir. Operating profit. You said 600 crores, right? No, sorry, net profit, you're saying 2,000.
Net
sorry,
PAT, I'm saying. I am saying PAT.
PAT of 2,000 crores in what year?
Next 5 years.
No, okay, fair enough. No, that's what I'm asking you. I'm saying you gave us a number for FY25. You said 13,000 crores in revenues and operating profits of 600 crores. So that's a margin of 4.6%. So
I'm saying PAT, not EBITDA.
PAT of 600 crores in FY25. Okay.
Yes.
I get that. Now I get that. Fair enough. I think we'll have to wrap this up. Thank you very much for joining us. Good speaking with you, sir. And it's a pleasure having you here with us. We'll talk about sort of, more stuff on the markets in a bit from now. But 15 points lower on the Nifty. So, now, the index really not going anywhere at all. Paytm is the top volume traded loser right now. It's down 4.5%. Stocks at about 327. From the day that the RBI sort of directive came, the stock basically, actually even as of yesterday, the stock had halved from levels. It was already down quite a bit from the time that the IPO came, but even then from the RBI circular date, it's halved. Narayana Hrudayalaya, we put out numbers earlier, 4.6% lower, 1352 is where that one is trading at. That's a sharp cut. Max Health, another hospital company, is down about 2%, 867 or so coming in there. Taj GVK, absolute high flyer, that's also pulling back a little bit. It's down about 2.5%, 347 on that. We'll take a quick commercial break here. Manisha will be with us, and we put the focus on commodities in just a bit from now.
All right, let's get a quick handle on what's happening in the world of commodities. Manisha Gupta is joining in. Manisha, what's the one commodity you're tracking today?
Well, Sonia, I'm looking at metals as a sector, which is trading on the lower side of the range. It has been doing so since the US CPI numbers came in, which have been much higher than the street was anticipating. And that has led to profit taking. The dollar index, in the meanwhile, also has reacted. That one is trading at a 3-month highs above 104. That has been weighing on. And then you need to keep an eye on the US Fed fund futures, which are now showing a probability of a 0 probability of a rate cut in the month of March. And it has come down from almost 90 to 40% of a probability of a rate cut for the month of May as well. And that really has been a botheration for many of these metals there. The Chinese economic data continues to be quite uneven, and markets are looking at more supplies also coming into the space there. So take a look at copper, and we're trading at a 3-month lows on to this one, almost 3.7 in the New York markets yesterday. If you look at the copper prices, we have declined 5.5% in the month of Feb alone, and we are trading in the negative for many of these metals, barring steel, of course. Also, there has been reports of large copper deposits discovered in Zambia, and that's yet another thing that is weighing onto the markets. Not just copper, if you look at the zinc prices, they have seen a constant decline. They're down by 2.5% in this week. LME inventories are trading at a 32-month highs in case of zinc. Aluminum as well has seen 4.8% of a decline in this year until now. For aluminum as well, we have seen Russian supplies continue on LME. Almost 82% of inventories that you have on LME warehouses comes in from Russia. So you are looking at higher supplies. Not just the ferrous or non-ferrous metals. When you look at the precious metal prices, we have the gold prices now trading below $2,000 per ounce. It's a 2-month lows for that. Silver is trading at around 2-week lows as well. We have seen silver prices decline by 5% in this year until now. So whether it's about gold, silver, copper, zinc, aluminum, all of these metals are trading in the negative in 2024 till time.
Right, Manisha, thanks very much for that. So that's commodities in focus. Well, we'll take a quick break here. On the other side, our special segment is the economy. Lata will get chatting with Alok Mishra of MFin, Shalabh Saxena of Spandana Spurti, and Sadaf Said of Muthoot Microfinance, recently listed, to talk about RBI's latest warning on microfinance institutions. Stay tuned.